Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Mike Sokol. He's the Senior Managing Director on Nasdaq's Market Intelligence Desk with our midday update. Mike, it's great to have you with me as always. And assuming the narrative doesn't change in the next few minutes, looks like stocks continue to react on the tower Tiff, but it's not panic selling that we're seeing.
Yeah, thankfully so. Trade is an important thing, important area for the U.S. But the question is, how does this all play out? You have a September 1 deadline for all of this trade discussion. I think more of the concern is, what's China's reaction going to be? And if it's not related to tariffs, then could it be some other asymmetrical kind of reactions, like slowing down business approvals or giving the tech companies that are there a hard time? So I think we're seeing some of the selling situationally, but you're right, it's not a panic.
Right. I mean, it could also be, too, it's summer trading. It's a Friday afternoon. Desks are relatively light compared to other times of the year.
Totally.
Let's take a look at the 5-day chart in the S&P 500, and we can see just how much equities are reacting to these tariff headlines. I mean, we had jobs number come out this morning.
Yeah.
It's a blip on the radar. It's never like that.
Yeah. And so the economic numbers are falling by the wayside. I think you see that first blip on the 31st there, that downward move there, and that was in reaction to the FOMC press conference, where Jerome Powell had made the comment about it being a mid-cycle adjustment, where people got a little bit nervous about how many rate cuts the Fed would do. The market was expecting 2 or 3. They started thinking maybe it's just 1. But as you can see, the market recovered, and it was doing rather nicely into the next day. And then all of a sudden, you can see very clearly it fell off a cliff, having to do with the headlines on the reimposition of tariffs. And that's carried us through to this afternoon.
Right. Well, that's one way to get more rate cuts.
Yeah.
And it was interesting, too, because we saw where the dollar was at, and of course, that moved lower, which is an initiative for the administration. Let's take a look at our next chart. This is U.S. Treasury curve. Brian had noted in the midday note that we're actually moving on the other side. It's the 5-year and the 2-year, the more intermediate term ones, yield is just continuing to move lower.
Yeah, exactly right. And he's the one who gave me the idea for this chart. He's on vacation today. But you can see the green line maybe a little bit more clearly. That's the current yield curve. The other line above it is a week ago's yield curve. And you can see that 2 to 5 year over there in that belly of the curve. It's not only flat, it's inverted. So people are paying, getting a 1.7% on a 5-year, and they're getting a 1.75% on a 2-year. Point being, when you have a flat or inverted yield curve, it's telling you that folks are worried about future economic growth. It also tells you that maybe short-term rates are too high. And so to your point, whether the Fed indicated that 2 days ago or not, we might be looking at a future rate cut. All
right, now going into next week, let's take a look at the trading week ahead. Really heavy with earnings the past couple of weeks. Does it start to slow down at this point as we're in the middle of August?
Yeah, you get some of the smaller companies. You still got a ton of companies to report, but I think the narrative is pretty much there. You're probably going to get a flat, if not slightly negative quarter, and I think people understand that for the second quarter. The question is now, how does the guidance that you don't already have come out for third and fourth quarter? What are the earnings going to be if the dollar is strong? Does that hurt multinational companies? So there's a lot of moving parts, but really people have more or less looked past the earnings because they've been expecting rate cuts. So we'll have to see how rate cuts and trade all mix into one another as we go into next week.
Right, and that's a great point that you make, that, okay, the earnings season hasn't been that good. The quality beats, top line beat, not necessarily on the bottom line. And guidance continues to be an issue. Then you have a week like we had over the past couple of days where we're seeing that reaction in stocks. Now we have, I believe, another announcement coming out with EU tariffs. President Trump is supposed to be coming out any minute with that. There's a lot of uncertainty out there, and you can't blame management teams for not being able to telegraph when there really is no clear message.
Very true, and you just don't know what the macro picture is going to be, and if there's global weakness, that makes it just harder for businesses to sell their products, obviously. So.
All right, Mike, as always, thanks so much for joining us.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.